Okay, we're back. We talked about market cap and what the market capitalization of a company is, and for the purposes of investing in stocks. Then in this video, we're going to talk about volume and average volume and why that's important. So if you go to any stock ticker page, pull up a stock ticker, you'll be able to follow along anywhere. These kind of terms are in there. So what I'm trying to get you guys to do is understand how to read that sheet when you type in a stock ticker. So that big number that you see pop up, that's the stock price. We went over market cap last time. Now we're going to talk about volume and why it's important. So you'll see a little abbreviation underneath anytime you search a stock symbol. If you search GE or Disney, you're going to see a ticker, a little symbol underneath that says VOL/AVG. If you go to Google Finance or Yahoo Finance. So this is where it says market cap. It'll say 52-week range, and then it'll say volume. VOL/AVG is how it's abbreviated. That's abbreviated for volume and average of the stock. That means that number next to volume is how many shares got traded that day in that stock. So if you buy Disney or GE or any of these stocks that you can trade on a publicly traded market, you'll see a volume number there, and it'll tell you, the first number is going to tell you how many shares traded in that stock that day, and the second one is going to tell you the average. And it depends. Some places show you the average for 30 days. Some places show you the average of a year. This is why it's important. And again, some of you guys follow me on microcapcompany.com, where a lot of you guys are interested in penny stocks and small cap investments. So this is important for you guys. Volume is important because if this volume is not there, you can't trade out of your stock, right? So the reason why people love public company investments and generally the bigger names in public company investments, because if you put some money in there, even if it goes up or down, you can grab your money and take it out. Now, a lot of people don't understand that on the other side of you selling your stock, there has to be a buyer. There has to be someone out there buying. So if you look at the volume for Disney or the volume for GE, you'll see a certain number. Now, what I want you to do is go down and try to find the stock that's under $1, that's a penny, and see how that changes. See how the volume changes. What you'll find is that there's some stocks don't have any volume, especially penny stocks, micro cap stocks that are just getting started. Some of these guys have gone public too early. Some of those guys have gone public just to raise money as under a public entity. But the point is, without volume, you can't trade out of your stock. So you want to look at that volume. If that volume says 0 or 10 or 20, right? That means if it says 10, that means there's only 10 people that actually wanted to buy and sell that stock. What does that mean for you? Well, if you buy a penny stock, this is usually a big issue with penny stocks and microcap company stocks. If you buy that and there's no volume, right, there's nobody to buy your stock. So here you go, you spent $1,000 and you bought this pharmaceutical company, this company you know nothing about probably, right? And it goes up 50 cents, right? And you pay 10 cents for it. So you're riding high on a 400% increase, right? And you go to trade it and there's no volume, meaning there's nobody on the other side to buy it. So you want to get into stocks that have volume, that are liquid. Unless you're a professional, and we're going to talk about reverse mergers later and some other tactics like private equity investments and pre-IPO investing. But for the purpose of this video and for you guys to understand how to read that, you guys want to look at that volume. If it has no volume, understand you can't get out of that. You can't trade in and out of that. If it has a lot of volume, it means this is good, right? There's a lot of people buying and selling this stock. Now, a lot of volume also means a lot of volatility, right? So there could be more swings in stocks that have more trading activity, whereas stocks that have less trading activity, less volume, right? They're usually a little more stable. So that's volume for when you're reading your stock ticker charts on Google Finance or Yahoo Finance. Again, you want to have volume in your stock for it to be liquid. If there's no volume there, you can't buy in and out, and it's illiquid. You don't want illiquid securities in your portfolio for the most part. Again, unless you're super sophisticated. We're going to get into some of that stuff later too. So that's what the volume is. We're going to go down, again, we're going to go down all these things that are on your stock ticker page so you guys totally understand. The next one I think should have been the first one. We're going to talk about the stock price and what it actually means to own a stock.